Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Thursday, March the 29th, 2012. Well, a continuation of the trend to the downside today, a candle with a lower high and a lower low, but a very small black body candle. Previous day's trading we had an extension in the size of the black body of the candle, and today a much smaller black body. This does raise some doubt about continuation of the trend to the downside. The black body denotes that the sellers made net bearish progress, but the amount of progress that they made is significantly less than the previous day's trading, so it does warn that the sellers are losing momentum. We also have a very large shadow on the bottom of this candle, and that coincides with the market trading below the 1400 round number level of resistance, support, which held as strong support on the previous day's trading. Previously, this was a strong area of prior resistance and support in this market, and a very important level for this market. Now, in terms of where the market's closed, we've closed down below the previous close, so the sellers remain keen in terms of that, but the amount of keenness is significantly less than the previous day's trading, so that does raise some doubt about continuation of the trend. But also the market's closed up towards the high, which means that the buyers have taken control of this market for today's trading. Whereas in the previous day's trading, neither side really had control. For today's trading, the buyers have taken control, and that sets the market up for a change of trend. But the large shadow on the bottom of this candle represents the sellers losing commitment, and that's the most significant feature of this candle. This candle is a potential Japanese candlestick reversal pattern. It's the hammer reversal pattern, and that's where we have the small body with a larger shadow that's at least twice the size of the body on the bottom of the body of the candle. The only issue here really is that we've only had a trend that's been in force for 2 days, so it's not a significant trend to reverse, but the implications of that type of candle is still the same, that there is strong potential for the market to make a higher high and a higher low and to reverse the trend. If we look at the trend in the second time frame, we have a series of higher peaks and higher troughs, and if we have a new first time frame uptrend established, this could be another higher trough in the market, and the market could go on to take out the peak at 14.19 to establish another higher peak. In terms of Ichimoku, the market's bullish on the long-term time frame by trading above the cloud, in the medium-term time frame by trading above the Kijun-sen, and neutral in the short-term time frame by trading at the Tenkan-sen. Previously we were trading above the Tenkan-sen for bullishness, but we're trading right at the Tenkan-sen. Interestingly, the Tenkan-sen also has acted as support for this market, and this is the second occasion that we've tested, and it's likely that we will see price action bounce up off this level. The Chikou span is above the corresponding price action, so that's supporting the bullishness in the higher time frames that we're seeing. So for tomorrow's trading, obviously the high of the current candle is very important, around 14.05 for a potential higher high and a higher low. More significant, however, will be the round number 1400 support. If that's breached to the downside, we could see the market trade lower, initially down to the swing low around 1386 and then to the flat Kijun-sen, but more likely that we will see the market test higher. Next, moving to gold, and here we see continuation of the trend to the downside. A similar pattern that's been set up with the equities market, with the S&P 500, where we were trending down prior to this, the bears in control on the previous day's trading in this situation. And today we have a very small bodied black-bodied candle. It does suggest that the trend is primed for a change of trend to the upside. A very large shadow on the bottom of the candle, representing sellers losing commitment down around the 1643 level, the previous level that I highlighted as a strong area of support, and testing below the cloud but finding support down at that level. The buyers have closed in control of this market, with the buyers closing up towards the high, and they've shown some commitment throughout the trading day to close the market back up towards the high after the sellers attempted to take control. The close is very close to the previous close, so neither side is really keen, and certainly not as keen as they were for the previous day's trading. The Buyers did however find some resistance up around the 1667 level, and that is an important level moving forward. The buyers will need to be strong enough to take out that level and test higher levels. We don't have any major resistance until the market trades up to the round number 1700. Certainly no resistance offered by swing highs or swing lows, perhaps down around the 1688 level, but certainly because we're trading within the cloud, there could be resistance anywhere within this area up to the 1700 level and even up to the 1732 level. In terms of Ichimoku, the market is neutral in big picture terms by trading within the cloud. The market is bearish in the medium-term time frame by trading below the Kijun-sen, and neutral in the short-term time frame by trading at the Tenkan-sen. Very similar to the equities market in terms of where we're trading in the short term. Really no strong trending action at the moment, but the market is primed for a change of trend to the upside in that first time frame. So the 1667 level is all important for tomorrow's trading, and it's likely that we will see the market test above that level and perhaps trade up to the 1700 level. Next, moving to light sweet crude oil, and here we see continuation of the trend to the downside. Previous day's trading, we had a candle with a lower high and a lower low, and the market was finding support at the window that was previously closed, but the market failed to close beyond. And for today's trading, the market has taken that out in a very significant way. We've tested below there and closed below that window. So now the effect of that window is negated. It basically has failed to work, failed to hold a support, whereas it held a support on 1, 2, 3, 4, 5, 6 occasions. So the sellers have really gained some downside momentum for today's trading. A very large black body candle where the sellers have taken control. They're very keen by closing the market down a long way below the previous close, but they did lose some commitment during the day, and we can see that the market tested below the 103.39 level, and some buying came in below there, but also we saw the market find support down around the cloud, and it interacted with the top of the cloud and buyers came in, and this highlights how strong the support or resistance around the cloud can be. Now interestingly, moving forward for tomorrow's trading, the cloud support from the cloud actually moves higher up to roughly around this 103.39 level or around 103. So that could be important for this market moving forward. We could actually see the market bounce off that level as well. In terms of Ichimoku, the market remains bullish by trading above the cloud, but bearish now in the fast term and medium term timeframes by trading below the Tenkan-sen and the Kijun-sen, and the Chikou span is below the corresponding price action, confirming the bearishness that we're seeing in the shorter time frames, but not confirming the bullishness that we're seeing in the longer term time frame. I highlighted previously this series of peaks and troughs in the recent history that where the troughs were becoming higher and the peaks were becoming lower, and we had the sellers and buyers offering themselves at higher and lower prices and coming together into equilibrium, and we've had the breakout now below that, so that could be quite significant that we've broken out below this pattern. It's very hard to describe what type of pattern this is, but we have had a breakout below this type of pattern. Some could call it a diamond type pattern, but it's really not very symmetrical. But the important thing was the narrowing of perceptions, with sellers accepting lower prices, buyers accepting higher prices, and then the breakout now. The only thing, as I've said, with this breakout is that there is some very solid support down below where the market's trading at the moment, and the support from the cloud extends all the way down roughly to around the 100 level. So if we do see the market test down to that level, then obviously the 100 level will offer itself as very, very strong support in this market. To the upside, if we do see the market bounce off the cloud and test above 103.39, then we do have now some solid resistance around the 105.31 level, and that level should be watched. But at the moment, the sellers are certainly in control of this market. They did lose some commitment, but we have had a very large body to this candle. It wouldn't surprise to see the market test lower and even down to around the 100 level and find support within the cloud. But let's watch the top of the cloud for tomorrow's trading. The market could bounce off that level and trade higher.